Let me just check the microphone. Okay, I think it's good enough. Let's start with setting up our charts. So, okay, I'm going to mark some important levels and let's go to the daily time frame. On the cues, if you go to the daily time frame, we are on pre-market, we are at 603 above 20 D2 or the 20-day period moving average. So let's mark this line again to be very precise. I'm gonna do it a little faster because I do not have much time. Let's mark the previous day high, the PDH line and PDL, previous day low. Lock it. Now coming to the hourly time frame. Looking at the hourly time frame, we can see that we are above, as of now, on the pre-market above the 20 period moving average on the hourly, 1 HMA should be indicated by this line. So now we have the previous day high, previous day low, D2 and 1 hour 20-day period moving average. Okay, now let's come to the 5 minutes. On the 5 minutes, yesterday we got a closing above this long-term swing trading reference point, which is 600.03. On, let's look at it from the hourly time frame. Yesterday we got a closing above this price and then we fall back down and closed below. Yesterday closed below this price point. So today I am looking at this price point as a reference point for the swing trading. Let's redraw this line again for precision. 599.77. Let's 599.77. We have about 5 minutes left. Gotta hurry up. Okay, 100, 280, 600, 280, 280, 600. Remove this. As of now, this white box, if you remember this white box represents the monthly opening gap. I'm going to drag this to where we are now because this will be really relevant as we are above this price point. So all in all, I am using this white box as a reference point. Above this point we are swing long, below this point swing shorts, to make it very simple. So there's that. Now coming to regular trading hours, electronic trading hours. Let's go to the daily time frame on the ETH. Mark the previous day high, marking previous day high, previous day low. Now we will come to the 4 hours time frame, not the 4 hours. On the 4 hours, if you remember this swing trading reference point, which is equivalent to these two lines on the 4 hours on the electronic trading hours, we are above this price point. So how far are we from this price? We are 140 points above this price. If you also remember this red line, this red box, this candle, what I said when I was leaving yesterday, I said bulls need to undo all of this 9 p.m. candle for swing longs, so that bulls want second leg of this move. A single standard deviation of the opening gap takes us to this point. So bulls, what do bulls want? Bulls are thinking that this is the first leg, or the gap is the first leg, and they are expecting some sort of a second leg. What did bears do yesterday? Bears who sold close of this bar, or the sold close of Friday, they got out at break even. So this was a low one short, which failed, which led to a reversal. So all in all, this is a good target for today. If we reach this target, I make it a bold. We have 30 seconds left until the market will open. If I do a close analysis on the 4 hours, we get a closing above this again, closing above, validating the uptrend, validation of the uptrend, validation of the uptrend. So on the 4 hours, we are more bullish than it's bearish, 60% more bullish. On the hourly time frame, we have a lot of bullish bars. We never tagged the low of the Asian lows, which can cause some problem for the bulls. All I'm looking at is the weekly open and this price point, this swing trading reference point. We might touch it, then continue with the second leg. We're gapping up on the 5 minutes above the 20 period moving average. This makes it the first leg. Bulls are expecting a second leg of this gap. Let's see how the first 15 minutes will close. We have opened above and gapped above the previous day high on the hourly. Give me a minute. 770, 747. Let's get a little more precise with levels. Let's come to the 15 minutes. On the 15 minutes, 770, 747. 770, 747. Making it a box. The next reference point I am looking at is 694, 720. Let's just skip all of this and move to a higher time frame and use the higher time frame references. So 691, 297, 297, 642, 642, 297. So now that we have a lot of other confluences for the bulls, so what are these levels? These levels are different confirmation points, or the areas of interest for the bulls. They might expect some sort of a retracement. If it fails to give a confirmation within this price range, the price may fall back to this point, then bounce around. So depending on these contexts, like this is the last line in the sand. If we move below this monthly volume imbalance or the monthly gap, which is 611, it's first 5 minutes about to close as a bearish bar. So all in all, this price point 642 is the last line in the sand. If we move below this point or move below these two white lines, this is the end point. I will be happy to take a short above this point. I'm more interested in taking a long. So yeah, the first 5 minutes closed as a bearish bar. Let's see if bears will succeed getting a close below the prior day high. Just give me a minute. Bears tried to move below 602, they failed. Let's see if they can get a closing below the prior day low. Let's see if we can bounce around from this point. Bears are probably succeeding to close below the parallel low. First 15 minutes about to close. We have gotten two bear bars. Single standard deviation of these two first bearish bars takes us back to the 20 period moving average. We're bouncing around from 770 point, which is an indication of confirmation. We have 2 minutes, 2.5 minutes until the market will give us the first 15 minutes. Bears, they want to close below this last validating candle. Bears failed to close below this last 8 a.m. candle on the 15 minutes, which was the last validation. Last minute may change the whole case, and we are about to get a close below the previous day high. The range of this bar is about 83 points. So if I execute on this trade, I will be risking 40 points, approximately 40 points to get 40 points. 15 minutes close. Since I'm not really interested in taking a short, because we are already at a place where the price may bounce around, I'll be now that we have gotten a confirmation on the 15 minutes. I'm expecting more of a range now. It's better that I get some sort of a bullish move. I'll be happy to take a long because overall bias is towards the upside. If I go long, my target, I already have a good target for the upside, which is the previous day high and yesterday's Asian high. Even if the market continues to range, I am not really expecting a swing. Basically, I'm not really expecting higher targets. So let's assume if I take a short, which I don't really want to because we are at the support point. So if I short it, I'll be shorting right at support. Even if I short it with a lower lot size, my target will be 707, which is not really bad. Since I'm This entry will be triggered once we get closing on 1 minute below this range. I'll be targeting 42 points to get 42 points, or I can easily target 691. It's 9:50, my entry is triggered. Is this a second leg trap? It might be a second leg trap. So I was really worried about taking this trade because we were right at support. So is what it is, right? Since I was not really, you know, confident about taking right at short, I am lowering my stop loss. Not the stop loss, the lot sizing. I think it's reasonable for me to get out of this trade. Yeah, I've been stopped out. Not really surprised to get stopped out right at support. So the reason this was the reason my stop loss was not the fucking stop loss. I don't know what's happening with me. I'm tired, man. Lot sizing. We got two bear bars, bull bar, a bear bar, and now we're getting a bullish bar. So it's overlap. Might try to take a long Once we close above this point, if I get stopped out again, I am not trying another long or not want to take another short. Bulls are waiting for this to close above the initial range. If we get a close above the initial range, then it's a good confirmation for bulls. Otherwise, it's more of a trading range, since got for first leg, second leg, third leg, or the first leg, second leg, or third leg. This sort of price action is somewhat of a range. We have 3 minutes until something's gonna happen. Either we're gonna get stopped out, either we are going to hit my take profit. Because the hourly candle is about to close. Bulls do not have a reason to get out. If we get, for example, something of a surprise like this. This was a big surprise for the Bears. So if we get some sort of a surprise towards the downside, then it's gonna be confirmed that it's a range and we are making an expanding triangle. But since I'm targeting the yesterday's Asian highs, which is untagged, and today's London highs, my target is reasonable enough to get touched, and I'm not really expecting that much. Hourly candle closed as it's really this is the most bullish candle I've seen in a while. It is really good. So the bears who were looking at the 15 minutes validation, Bulls are expecting 896 minimum. Bulls still do not have a reason to get out. This is the first candle of 10 a.m. and the new hourly candle. So I am treating this candle as the open of the day. So there's a basically, let's say, 60% chance that we will take the low and the high of the first candle of the hour. If this candle closed as a bullish bar, we will have 3-bar micro channel bullish. So bulls who bought the close of this bar, minimum they are expecting 605. Bulls still do not have a reason to get out, starting this micro channel on the 1 minute. If we go to the 3 minutes, we have 5-bar micro channel. Very close to getting my take profit hit. We have tagged the previous day high. I'm closing my position now. Okay. So, thank you for your time. And there was the scalp of the day. See you until next.